Was it right to pause again at 4.75% here in your view?
Yes, I think first of all, I think the decision was expected. We have seen inflation come down. It was 5% at its peak. Now it's at about 3%. There's sign, and this is in the past year. If we look even more recently, the inflation has come down even further. So I think that we're starting to see, both on the inflation level and also on the slowdown in the economy, that the monetary policy is starting to bite, both in the inflation, which is its purpose, but also, of course, on economic activity.
I think it's fair to say that the outlook has never been more divided, though. We're seeing government efforts to weaken the judiciary, of course, subsequent mass protests really unsettling asset markets and also sending the shekel to a 3-year low. Actually, it was S&P who said that these protests would lower economic growth this year. So what do you believe the path of rates is from this point on?
The truth is, it's truly a question mark. On the one hand, we're seeing inflation and economic activity slow down. On the other hand, what has particularly slowed down inflation has been inflation of goods that are tradable, which means our imports are getting cheaper, in part because inflation has dropped abroad. On the other hand, and compensating for that is the fact that the shekel, as you just mentioned, has been one of the weakest currencies this year. And the further, if the shekel continues to weaken, well, this drop in inflation from tradable is going to disappear. And if we look at the domestically generated inflation, we're still substantially above target. So it's not clear at all that we have seen the end of rate hikes in Israel.